Hello, good morning to another Amati Insights call. And just you can see ahead of you the disclaimer slide, the usual disclaimer, which is also available on our website. Key point here to remember is that any stocks or funds that we talk about on the call are not meant as investment advice. It's important always to do your own research and or seek professional help. But with that said, I'll stop sharing that screen. And welcome to the last Amati Insights call for the summer. We're going to have a break for the next month or so and start again with back to school, probably sort of early mid September time. And we thought we'd just use this as an opportunity to review the sort of series so far, how it's gone, progressed, what we've been doing and what we've been trying to do. So far, we've had each week or each other week some brief thoughts on a subject that we think is of interest. Some of those have been very sort of timely, where we've talked about things like the bank failures or commercial real estate issues. Some of them are sort of longer term subjects where we think the market is it's underestimating the potential. So areas like nuclear energy or machine vision, for example. But really, it's been an opportunity for us to kind of bring to life some of the collaboration across the teams at Amati and sort of just give you a bit of a window into how we think about things and the way we operate. And so far, it's been quite successful, we think. For a very small call, we've had viewership of around 200 people for most of the calls, including the live and the replays. So we do appreciate your interest and support so far. And we hope that we can keep bringing interesting stuff to you. And just a last point before I hand over to Mikhail to talk about some of this week's subjects, we are always open to suggestions from outside. So if you have any ideas of things you'd like us to talk about or subjects that we could give you our thoughts about, please do send them in. So with that, over to you, Mikhail.
Yes, thanks, Graeme, and thank you all for dialing in today and on previous occasions. So this time, rather than giving you more of a deep dive, if you like, or in a single subject, we would share what we kind of jokingly describe as a summer reading list. We sort of asked ourselves, what are the biggest investment questions and the areas of focus of our research for the summer that we're working on today? And it's a little bit more half-baked. We don't have conclusions and stock specific thoughts on many of the subjects, but we thought we'd share a couple of those things that we'll be thinking about doing work on over the course of the summer. And one of the areas that probably applies to a group of areas where we're obviously in uncertain economic times, and there is such thing as economic cycle, which pertains to demand for goods and services, but there's also inventory cycle, and that sometimes those two collide. And one of the areas where historically the cyclicality was most pronounced is semiconductors, and we're seeing a range of opportunities where for us a fairly clear long-term structural growth is obscured by near-term cyclicality. Sometimes the cyclicality is a fact. For example, we all bought smartphones and new PCs and game consoles during COVID. We don't need a new one today, so that sort of replacement cycle gets extended. So we're in a very pronounced down cycle in smartphones and consumer electronics space, and semiconductors supplying into that are affected by it. On the other hand, in autos, we had a supply disruption. Now there's a bit of pent-up demand, but market expects the cycle to happen. Cars an expensive purchase, times are uncertain. It's logical that the demand might cyclically be depressed over the next a couple of years. So again, semiconductor companies that supply into that are depressed by these expectations. So we look at in our view, technologically inevitable and in the long run, somewhat macro-insensitive areas of, for example, connectivity chips for areas like Internet of Things, or power semiconductors that electrify electric vehicles, but also other industrial applications. Photonics that go into 3D sensing and increasingly fiberized communications in data center. And we see companies that are profitable, that are cash generative, that will be structural winners through that cyclicality, and have the wherewithal to weather that storm, or at least a chop. But they're trading on sort of teens, low teens multiples, 11, 12 13 times earnings. So we're picking through that area, and we've got a couple of holdings in that space already. We think we might end up with one or two more as we do this work. So that would be one area where we're doing quite a lot of digging.
Yeah, and another area that we think has got a lot of press attention, and we think is very early stage yet, is this whole process of reshoring. So a lot of the global supply chain is being reviewed. Countries like the US, Europe, and Japan are looking to reshore a lot of the critical parts of their supply chain, so they're not so dependent on that dispersed problems that we've seen over the last few years, particularly through COVID. And this is beyond just semiconductors. This includes areas, products, components for electric vehicles, solar panels, lots of different things. And it's a very clear industrial policy change by these countries. And we're seeing it in very large initiatives in the US. You'll have heard of things like the Infrastructure and Jobs Act, Inflation Reduction Act, and even the CHIPS Act. And there is a very visible impact of this already that we can see in the manufacturing-related construction in the US, for example. So the recent Census Bureau data shows that construction, that manufacturing-related construction, has doubled over the last year. So it's now reached about $190 billion. And obviously, that's because of these very attractive incentives that are on offer. And as we know, these buildings are not going to be empty. They're going to be filled with production equipment. And so we think we're at the very early stage of that CapEx cycle. And it's being supported by its trend to industrial automation. So more and more automation in factories. And that leads to, we think, an interesting period ahead for some innovation areas like RFID or machine vision, which we've talked about in the past. These things are helping to bring down the cost of operation, improve productivity, and offset the big rise in employment costs that we've seen around the world, as well as the fact that it just costs more for companies to employ people in their own country than it does perhaps in other parts of the world, India, China, for example. So, but this is not only in the sort of industrial world, it's also an issue in defense. So we're seeing again, a ramp up in production in defense because of obviously the war in Ukraine, and what that's brought to light particularly is how a lot of countries have not had the right stock levels of munitions, ammunition. So there's a big restocking process that's starting in places like the US and Europe. And it takes time to build up that infrastructure, that manufacturing infrastructure. And so we see a lot of investment going into defense. And some of that is in very innovative areas. And one that particularly interests us is space. Space has become a real focus, particularly for the US Department of Defense. Hopefully we'll talk about that in a bit more detail in the future. But just to give you a snapshot, some interesting areas there, a lot of investment in things like sensors, propulsion, laser communication, and even energy weapons. So some really exciting things, and our role really is to try and find the companies that are best positioned with the right risk-reward balance to get access to that growth spending.
Another area that we're doing quite a lot more new project work is biotech, and what's been happening in biotech, in our opinion, is the innovation perimeter, if you like, in life sciences had expanded. We've discovered new mechanisms to affect new compounds, to new modalities, the industry calls it, to kind of impact certain biochemical pathways in the human body to productive effect. So this research is really promising. We've already seen some transformative treatments resulting from that, and there's more to come. But of course, it also coincided with a boom in venture capital funding. So we had an interesting, there's a lot of targets to go after, but a lot more people, a lot more companies, including some venture capital funded, many venture capital funded startups, were going after those targets. So even though this research is worth pursuing, the industry was maybe a bit too exuberant in terms of how many people got funded to pursue the same thing. And we're seeing a real correction in that space. So the kind of this free venture capital has been drying up, and the industry is recalibrating to a new baseline. That has real effect on tools and services supplying that kind of biotech discovery, from the tool you use to initially discover the thing that you're pursuing, to maybe a company that supplies you with reagents or helps you biomanufacture something to do phase 1, phase 2 clinical trials, all the way through, hopefully, commercialization and success in the market. Now, so we're going through this correction. There's been plenty of profit warnings in the tool space. We don't have that much in that. We weren't affected by it that much, but we're watching it very closely. And we think the science will still be pursued for all the right reasons. And eventually, the winners will become commercial drugs. And some of that supply chain will really benefit from that. So we're kind of picking through this, much more affordable companies in that space, again, with our valuation discipline and profitability focus in mind. And there's a couple of things in our blotter today that we're working on, in the sort of tools and services into this a bit more depressed life sciences space. And lastly, we couldn't sign off without talking about AI. And here the situation is maybe the opposite. I mean, as you know, from those of you who dialed into previous calls, we were very positive in AI. We had a call about this earlier in the spring. We had a position in NVIDIA from the beginning of the year. Well, we really were surprised how quickly the public enthusiasm for AI and the particular kind of generative AI variety of it had carried the share prices of some exposed companies, to very high levels indeed. We think there's way too much, priced into the stocks a bit too quickly. So we sold our NVIDIA position, for example. Our valuation discipline cuts both ways. So we exited that stock. And we think in some other kind of headline perceived beneficiaries of AI market is jumping to conclusions a bit too quickly. And we've lived through the dot-com boom one, and we remember that before Google became the winner in search, there were Alta Vistas and Yahoos and other protagonists that didn't quite make it. So it takes time to determine who the headline winners are. But we're a bit more interested at the moment in underappreciated lateral beneficiaries. So we're looking at companies that have particularly compelling data sets that will become more valuable now that you can extract better answers, or can generate better content of those data sets using these new tools. And frankly, we're also interested in humble but potentially quite interesting IT services companies, because every company in the world, including I'm sure those that you work for, is asking, or the board is asking executives, what is our AI strategy? And that board probably then says, okay, let's get Accenture in or somebody like that to help us make sense of it all. And so these companies, even though they're not the most exciting businesses in the AI space, might be pretty prominent lateral beneficiaries of those things. So those are some of our items on our reading list for the summer. And if you have more questions or thoughts, then please let us know. We'll be delighted to hear what you're working on, what you're thinking about, and we're really looking forward to coming back to this virtual room and discussing ideas and sharing our thoughts with you later in September. And thank you again for your interest and for dialing in and listening to the replays. Speak to you again in September. Have a wonderful summer.